Well, joining me now is Svenja Gudell, Chief Economist for Indeed. Svenja, it's great to have you on the show this morning. And this was pretty strong data, in fact, well above what economists had expected. Is this data this morning consistent with what you're seeing on your platform?
Good morning. Thanks so much for having me on. Yes, it's surprising data. Don't bet against the labor market. Currently not a good thing. And it is consistent with what we're seeing overall. Keep in mind, big picture, we're still in a cooling labor market, and while these numbers are certainly stronger than what we've seen back in 2019, and certainly stronger than the last few months, they are overall cooling from what we had been seeing last year, for example. So that broadly is in line, and I think this is good news, right? Particularly as we've had some more negative news. And the worry was that the market was cooling too much, perhaps too fast. And so this gives you a little bit of an indication, another data point, that we are on solid footing on this front. And overall, what we're seeing on Indeed right now is that we are also experiencing still outsized demand for job seekers out there. We're seeing more job postings today than we did prior to the pandemic, so there's still strength there, even though we are on this overall trajectory of cooling.
Mm-hmm. In terms of industries or sectors, Svenja, that are seeing outsized growth for job seekers out there, which direction could you point them in?
Overall, it's the payroll numbers that we saw come in today line up with what we're seeing in our Indeed job postings index, where we're seeing a lot of strength in the numbers for in-person sectors. So think about food services, healthcare, government services, where you're actually much more likely to have person-to-person interactions versus remote work or knowledge worker work type jobs. So a lot of strength still there, and like I said, we're seeing a lot of payroll growth there right now. A lot of that has to do with, of course, consumption still being relatively strong, and of course, healthcare has been really a strong sector for us for quite some time at this point. We do expect that to continue.
For job seekers out there, Svenja, how can they get noticed on your platform?
I think make sure to sign up and fill out a profile on Indeed to make sure that all of your information is in there, and then you can search yourself or you can be found by employers. And the more data you provide to us and give us an information about what you're looking for, the better it is to find that perfect match in there.
Interesting. So in terms of pay, I'm not sure how much access, Svenja, your platform has to pay ranges, but are you seeing much change in terms of the average hourly earnings that job seekers are getting?
So we measure it slightly differently. However, our data is in line with what we're seeing today with an increase in average hourly earnings. What we look at is the salary information that's disclosed as part of job postings. So our indicator is quite leading in terms of where wages could be going. And we see that roughly 57% of all job postings in the US carry some sort of salary information on them. And right now, our Indeed wage tracker, which is our method of then measuring what wages are doing over time, is at 3.3% annual growth, meaning wages are higher by experiencing 3.3% growth compared to last year. And that's actually ticking up slightly. So we're seeing strength in re-acceleration of wages there.
Interesting. So, of course, all eyes are tuned into the Federal Reserve, Svenja, and what it's going to do going forward when it comes to interest rates. We expect another 0.5 percentage point rate cut in total by the end of the year, perhaps across several meetings. Have you seen the Fed's decision to scale back interest rates impact the postings on your site?
I think it's too early to really see all these impacts. The actual impact will kind of take a lot of time to trickle through, and we'll see all that. I do think there's a mental impact just to participants in the labor market and the entire economy, right? This is a signal by the Fed that we're making a clear decision to turn our attention from inflation to the labor market, and I think that's a good moment to make that change, but we don't really see an impact quite yet in the numbers, and I think we'll continually see that over time being incorporated into the data.
For our viewers tuning in and wondering how average hourly earnings changed in the course of this past month, the jobs report did indicate for September that average hourly earnings were actually up 4% from the same time a year ago and 0.4% from the month before. Both figures better than expected. Svenja, I'd like to hear from you in terms of seasonal trends, what you might anticipate between now and year end. I had seen the news yesterday that Amazon, for instance, is adding 250,000 seasonal workers as we get into the holidays.
Yeah, I mean, we're closely watching seasonal hiring to see what's going on in that front, and early indicators show that we're roughly on trend with what we saw last year, actually. So we'll continue to dig into those numbers. It is kind of kicking off. It started kicking off last month and into this month as employers start to ramp up for the holiday season. And I think that will be a really good indicator to give us a sense of, are we at an inflection point in the labor market? Are we really starting to put a bottom under it and starting to come back? Because we are in a bit of a standstill in the market, as we're seeing the level of hiring is down significantly. The quits rate is down quite a bit. So employers are not letting people go. Layoffs are low, and job seekers are not bouncing around jobs as much as certainly not as much as they have been. So I think things have really slowed down in terms of what's happening. I think as we enter this holiday season, we might start to see a little bit more churn, perhaps more than we did last year.